What's up, guys? It's Greeny here. Welcome back to another banging tutorial. Now, obviously, we're facing quite a challenging time in the crypto market. Lots of people are bearish, lots of people are bullish. So today, I thought I'd step it all back and would take a macro perspective outlook, analyze the charts on Bitcoin, Ethereum, and Solana. Let's see where I think price potentially could go. So as always, please subscribe down below, smash a like button, and do turn on notifications so you stay up to date with my crypto tutorials. Lastly, guys, check out GTG if you want to join me every single day, as well as other top traders who have been trading in cryptocurrency for many, many years across futures, meme coins, altcoins, NFTs, DeFi, and so much more. Check out GTG. You can sign up down below for $1 a day at the starting price. But obviously, if you want all premium features, sign up for GTG Premium in the description below. As always, guys, here is my macro analysis on Bitcoin, Ethereum, and Solana. Okay, guys, let's dive in. So, as I said, I want to take a real macro focus. What I've been tweeting about today is a lot of people have been trading meme coins now for a long, long time. Now, me being one of them, I've been trading them since about early 2023. So I'm coming up nearly on 2 years since I've been trading meme coins across all different chains and primarily Ethereum to begin with, and then Solana season since the end of 2023. Now, why I mentioned that is a lot of people have changed their mindset around crypto and around investing and around trading. They lack the patience, they lack the understanding of how long price actually takes to potentially make a move. And in a macro sense, when we look at charts like this, as you can see, we've been trending for a very long time, and people get quite bored now because of meme coins, okay? And they're bored and they don't want to hold these sort of assets for a long period of time and see those gains because they're so greedy, based on what we've seen in the trenches and in the meme coin space for well over a year now. So for me, it's really important to do these sorts of videos for you guys out there so you stay up to date with an actual macro understanding of potentially where we could potentially go higher or whether it's actually potentially time for us to go lower. So what I thought I'd do today is really hone in on BTC, Solana, and Ethereum. Now, obviously, I'll spend a lot more time probably on Bitcoin specifically because at the end of the day, Bitcoin is number one. It's the king of cryptocurrency, and it's the one that really does determine what happens to your altcoin bags, what happens to your meme coin bags, what happens to your NFTs, what happens to your precious AI tokens, okay? What happens to Bitcoin really determines what happens in the rest of the market. So recently, we've actually seen fear, okay, on the crypto fear and greed index come back onto the charts. And we have not seen that since literally August last year, okay? So way back here, okay? Actually, outside of this range, way back here, we, at these lows, way back here when we first moved out. Here we go. I've got to backtrack so far. So August back here was the last time we felt fear, and fair enough, okay, we went down to the 40K region, which we had not visited since we broke out earlier in the cycle. Now, we reached fear for the first time since then, guys, so that screams opportunity if the bull market continues. Now, for me, I still remain quite bullish with this space. You've got one of the most sort of bullish, what could we say? Presidential candidates, or not candidates, he's now sworn in, my apologies, presidents ever in history to obviously take office. So that's really good for crypto. However, macroeconomic decisions that they're making right now really isn't good for risk on assets. So being aware of macroeconomics and macro trends and potentially what actually has to happen can often influence what is actually going to happen in the charts and in the crypto space. Now, obviously, I'm an investor, I'm a meme coin trader, I'm an altcoin trader. I trade futures most days of the week as long as price gives me an opportunity. But at the end of the day, guys, with trading, okay, your bias should always be neutral. I understand that obviously it's important to have a bullish bias or a bearish bias, and I do. I still remain bullish, okay, and I'll explain why. But ultimately, what you need to know is at the end of the day, I'm a trader, so I'm going to be trading down and I'm going to be trading up, whatever the market presents you, okay? Now, obviously, the big catalyst is your spot bags, okay? And that's something where we need to really start facilitating conversation. And Craig and I have been talking about that now for a very long time on our live streams twice a week. But how do we take profit? When do we take profit? Those are the sorts of conversations that are going to start happening over the next probably couple of weeks, potentially, if not the couple of months. So those are conversations we'll have on live streams, and I'll be sure to release some more videos as well. But let's dive into the analysis. So I've got 3 Bitcoin charts to talk through. Now, obviously, this is the range that we've been in, as I said before, since 11th of November last year. Now, we've front run everything, and I've said that so many times, okay? So we made a previous, we made a new all-time high before the halving, okay? The halving was in mid-April, or the start of April. So that was the first time in history ever did that. We broke out of consolidation, okay, down the bottom, and apologies, my charts aren't loading. Oh, no, it should be loading. I don't know why it's not loading. There we go. So as you can see, we broke out of consolidation and the bear market faster than we had in previous bear markets as well. We only spent a couple months, okay, not even at the all-time lows. Whereas last cycle, if you do go back and have a look, and unfortunately my charts are going to be real slow with loading at the moment, my apologies, but hopefully it loads in here. But if you look here, guys, we spent so much time down in this accumulation zone, okay, making lower lows, lower highs for a very, very long time. And we spent, as you can see here, the ultimate lows, we spent, look at that, 150 days, okay? Whereas this time we spent only a very small portion of time. So we front run that, we front run the breakout, and then we front run a new all-time high. We then have also front run the breakout of consolidation, okay? So this period here, okay, when price likes to sort of consolidate, okay, from here to there, okay, we have also broken out quite aggressively, and we are we're fast outpacing essentially where the market has been in previous cycles. Now, based on history, okay, the crypto bull cycle tops around September this year. So that's about 545-ish days, okay, from post-halving to the peak of this cycle. So potentially that could see us obviously see a new all-time high based on history later in the year. So Q3, maybe into obviously Q4. Now, that would align with what we saw in 2021, okay? We saw a massive peak here, okay, at the start of the year in 2021. We broke down terribly bearishness, and then we all of a sudden pumped all the way back up to make a new high, all-time high in November in 2021. So potentially that could happen, okay? Or potentially we just make a macro local top here, and potentially this might be the last sort of steam that Bitcoin has this cycle. We just don't know. But what we do is analyze some factors to make decisions around that. So ultimately, I have been already taking profits. I've been taking profits at Bitcoin from about 90K above because, again, my average entry was way down below $30,000. Now, what we're looking at here is just, again, another range. So for me right now, we're trading. I'm just remaining patient. There's no real bias here about whether we're going to go up or whether we go down. So I'll just wait for price to do its thing and wait for potentially macroeconomic news to come out to distinguish what's going to happen. Now, the two indicators that I want to show you here is the bull market support band, which is this green and red bar. Now, traditionally in a bull market, okay, it uses this level as support, and as soon as it breaks that, then potentially it is a bearish trend. If you go and check this along history, as you can see, last cycle we were well above it, well away from it, and then as soon as we broke it, it's quite a bearish trend for a period of time, and then it's off to the races on the downside after the 2021 peak. And as you can see, once you break above it, then you can confirm bullish continuation and bullish bias again. So right now we're still very overextended. We haven't obviously retested that since about October last year, but we are well above that. Now, confluence with that is also the 200-day moving average. Very similar, okay? This acts as a very good support line, okay, and also rejection line and resistance line in the bear market. So that's definitely one to keep an eye on as well, the 200-day moving average. Now, as you can see, they're all starting to correlate, okay, at the bottom of our range. And this range is just simply the liquidity event that we've had on the 12th of November and the top of this range where we have failed to actually close any candles, okay, both times this cycle. So this is my range, top of there, and the bottom there, that liquidity event there, and then obviously that's the middle of the range. Now, ultimately within that, there are several other ranges, and obviously this is the sort of macro range that I like, but again, there's no real wrong way to read it. This is just one way that I am reading this market. So for me, I could easily see us come down, sweep this liquidity from obviously the weekend where we had the biggest liquidation in history, $2.3 billion. Okay, sweep that and then continue high like this and maybe push for a new all-time high in the coming months, okay, and into March, into April. Or alternatively, I could easily see us come back down here, retest all of this liquidity that we have, obviously only touched a couple of times, and we have swept it, so that's fine. But you could come back down lower and sweep the liquidity that we have not touched since the end of November last year. Now, Bitcoin in history doesn't retest its previous all-time high until the bear market. So if that did happen, then I would still be quite bullish that we would expect a bounce. And for these sorts of areas with the 200-day moving average, with the bull market support band to really still continue in this green above the red line, okay, that shows me bullish strength. And this trending line continuing in an upwards posture would also show me that potentially continuation will occur. Now, obviously, if this starts to change, then potentially I will change my bias. And ultimately, if we do lose that low 80K region, okay, the high 70s to low 80K region, then more than likely my first target would be that liquidity, okay? This little block here, obviously at the mid 70 levels, but definitely these highs here, okay, that we haven't touched since we obviously left that zone at the end of last year. So that's the first chart, okay? The second chart is this one here. Now, again, I'm very much starting to explore other trading strategies for when the bear market comes around. And shout out to Sexy and GTG. He's the best trader I've ever met in crypto, and he's just so amazing to talk to, and he does live streams every single day in GTG. So as I said before, check check that out down below. If you want to become a better trader, we will teach you to become a better trader. So 2 alternatives that I'm starting to see now is potential Elliott waves theories. Now, based on this, okay, and you don't really know until our price sort of presents these opportunities for you, but there's 2 scenarios that happen, okay, and essentially it's just a 5-way process, and within these 5 ways, you obviously have correction waves, which are in A, B, C, and then you have impulsive waves, which are your 5-way indicators. Now, obviously the macro one is either this red one or this potential blue one that we're seeing. Now, potentially we could have all maybe even seen the 5th wave play out here, and this is it, and we're down to the downside, guys, way down here. Maybe that isn't going to pump up there, okay, and potentially this is the 5th wave. And the reason that it could be potentially the 5th wave is that we have actually taken out the high there. So unlike here where we hadn't taken out the high until we broke out and then reconfirmed it and went crazy, we have actually taken out the high. So that is a big reason for me that we are maybe leaning more indecisive at the moment compared to what we would have seen here, where I was pretty clear in my plan that this was bullish continuation to the upside. Now, obviously, as you can see here, if that is the 5th wave, then more than likely we probably retest this support zone that we broke out from quite a while ago, which again comes into that low 80K region, which aligns with some of those analysis that we showed you before. Now, alternatively, that isn't the 5th wave, and potentially we're going to consolidate here for time. Okay, so price is going to come down here and then make its final wave up to the upside. So let me make that the blue one, okay, which is your blue numbers here. And again, I can turn these numbers on, so the waves, just to show you what they look like. But this is what I'm looking at, okay? So 1, 2, 3 massive wave, 4 correction, and potentially 5 there. Now, ultimately, this 4 could be way out here now, and the 5th wave would be way up there, okay? That's the red line. But what I'm looking at is the potential play that this could be the potential, not top, but definitely a macro local top. And it's one scenario that you need to be aware of that could potentially actually happen. Now, obviously, if that doesn't happen, then potentially this red could play out. And we've only just seen the 3rd wave. We had, obviously, the bottom here where we had changed macro structure. We then made a higher high. We then made a higher low. Makes a lot of sense. So that should be the first drive, the 2nd wave, okay, into an impulsive 3rd wave. We're now correcting, okay, and potentially, as you can see here, 1 to there, 2 to there, shallow pullback, 3 to there, okay, and maybe the 4th comes back down and retests this long-term trending. And again, this could take time, guys. This lines up in March, and I've said this for a long time. I remain bullish, and I actually think it's better for the market to consolidate for longer, and the bull market will last for longer in 2026. So potentially we could see a wave like this. Now, the last analysis I want to show you. So just to show you, we could potentially have maybe seen a macro local top. We don't know until price shows us in the coming weeks, or potentially come back down into these levels and we retest and then push up maybe towards that 115 to 120K first, and then potentially higher as well. Now, how I get those targets is if these lows hold. So if we look at this chart right now, okay, so again, if we hold this high here and this low here as well, so this low, this liquidation event that occurred on the weekend, okay, or earlier this week, depending where you are around the world, if that holds, okay, then my target could potentially be up here at the 1.618 at 121K. Now, ideally, okay, if you think it's going to be super impulsive, then potentially you might see, let me just change that color. I'm flipping around with my charts at the moment, guys, so do bear with me. But what we can see here is potentially a move up to the 2.618, which is around that 138 to 140K region. Again, this all depends on what charts you are, what exchanges you have. The price will vary slightly on those different exchanges. So for me, right, I'm looking at this and potentially seeing that if this low can hold, and if we consolidate here, which we have held this mid-range now for quite a long time, and if we do look at the weekly in a second, I'll show you that as well. But if it does hold this range, okay, and we maybe only sweep above this liquidity, okay, then potentially these sort of targets are very on the cards. The 1.618 at 121, I'll probably be taking a lot of profit there too. Potentially if we get a really impulsive wave backed by maybe a strategic reserve buy, or obviously strong announcement of confirmation within a time frame, then we could push about 140, maybe blow off to about 150K. And then I definitely think that would be a macro local top. It could be the bull cycle peak. But again, we won't know until later in 2025. Now, if I just show you the weekly as well, and the other thing I want to show you is that stochastic momentum is, again, on the daily, still postured to the downside. Maybe we consolidate for a little bit longer, and then we maybe see if we could re-push up a little bit higher. No real bullish divergences forming just yet. Let's look at the 3-day. 3-day has room for downside, okay? We've had multiple bearish divergences as well, so pressure to the downside. The 5-day, okay? 5 days kind of oscillating right in the middle on both indicators, the CC RSI divergences, but also the macro indicator stochastic momentum still postured to the downside, well below the pivot. Let's look at the weekly. Weekly is very overextended, okay? But again, we're still below the pivot by $5,000 now. And I mean, we're still 4 days out, so this could turn around, but the posturing is towards the downside, okay? And now if we do look, okay, prices held above this 93K level for quite a long time, okay? We have not closed below a weekly candle or a daily candle below that region for a very long time. So potentially that is showing that buyers are stepping in at that zone over a period of day. And that shows me that perhaps people don't want it to go lower yet, okay? Market makers, governments, funds, okay? Countries out there who are wanting to stack Bitcoin are stacking Bitcoin at 93. Now, eventually buyers might not bid anymore and potentially do break down to the bottom of the range, which, as you can see here on the weekly, is also a mid FVG, a fair value gap. So this is a massive level for me, okay? This low, mid 85, but then obviously the high 70s and low 80s is a massive level for me. So that's what I'm watching at the moment. Stochastic momentum on the month, let's go to the monthly, is again quite overextended. If we go to the index, just to show you the index, we are overextended at the top as well, 92,000, but we're obviously above that pivot. We've only just entered the start of this month, so there's still a lot of price action to play out. But again, right now I remain neutral, okay? I have no real bias about where price is going to go, so I'm just going to sit on my hands and stay patient. Now let's dive deeper into Ethereum and into some of these other plays. Now the other day we caught this massive beautiful long in GTG, so that was fantastic. We weren't in any trades, so we didn't get liquidated because we're smart, okay? We don't risk our trades at the wrong time. We know when to capitalize on opportunities, and we know when to not capitalize on opportunities. Like right now, we are not entering any new trades. We're just staying patient in the market at the moment. So why did we bid this level? Okay, I would have you would have maybe seen me tweet this out. I might have to go to the weekly. You might have seen me bid this out, okay, on Twitter as well. But what I was looking at was that Ethereum hadn't revisited these sort of lows for such a long time. So if you do come and have a look, okay, if we tag the absolute low to the all-time high, okay, these levels were massive, okay? We hadn't swept this liquidity, since we've broken out there in mid-2024, so it was a big target for me. Now, that was obviously the big catalyst there. I thought maybe we could retest 1.9. We didn't quite get there, okay? Now, if you come and have a look at the swing, okay, where did we get to? We came back down a little bit lower. So this is a swing low too, if we go to the swing high, okay? This is why I targeted that level. So swing low, okay, so the low of June 2022 to the swing high that we have seen, okay, just a higher high than this one over here. Again, it's going to vary, but this is the index. And where did we bounce to? Literally the 618. Now, I did say, okay, I had a stop, I didn't have a stop loss. I had an entry at the 618, which we caught. So we're up a very nice bag at the moment. Our entry is around that 2.2 average. And then I did obviously think that we could sweep below this liquidity event here as well. So for me, I was watching those levels. We took it one step further, guys. We moved our fib up to this level as well, which also is, again, one of the strongest swing lows to the swing high. And if you do move it just back to either of those highs, okay, just to show you, it is pretty much equal highs nearly. Where did we come back to? We came back to the 782 as well. Another great buying opportunity, particularly if you do think that the macro market is going to continue. And I mean, liquidation events are opportunities. As long as you aren't in positions already, unless you're obviously in a short in that position, then you would have printed. But as you can see here, what happened? Okay, I knew potentially we would come back down, retest this level as long-term support. We've set macro high lows for a very long time. So I was hoping that we would do the same, and sure enough, we did. And then we sure enough had a buy entry at the 786, which was just below. So I did have another buy entry down at 2.072. Didn't quite hit. But at the end of the day, we had our buy orders from about there onwards down to there. And I did think that we would sweep this liquidity. And sure enough, it happened. Now, my stop loss was well below that wick, obviously, from 5th of August last year. Again, that was another catalyst, and I'm pretty sure that was a liquidation day as well from last year. So for us, that was a great trade, and now we're up a considerable amount on Ethereum. So my read right now on Ethereum is to just hold my spot allocation. It's still consolidating here in this massive range. Again, this is there's no bias for this. This is a symmetrical triangle, which could break to the upside or break to the downside. This has just been a very long symmetrical triangle, literally multiple years, 4 years, like 3.5 years, guys. That is a wild long time to consolidate. But I mean, Ethereum just hasn't been at this cycle, but it was a great opportunity, and we are in a long here, and I have taken a little bit of profits off the table at these levels because I do think that maybe we do come back down, retest this again, maybe take out half of that candle as well, but again, or retest support, whatever it is. I have taken some profits on that, about half the position, but again, I'll look to maybe re-add if we do come back down here with my stop loss at break even. So a very simple trade. Now, obviously the last one is Solana. Now, This has obviously been the narrative this cycle. I still hold my largest allocation in crypto is Solana. So if we do take a quick look at this, the weekly is obviously a little bit more skewed, but what we're looking at here is a breakout range. So we broke out this range after a long period of time. So similar to Bitcoin, we had continuation, okay? Massive breakup. We then consolidated and then we continued high. We had a retest of this, okay? It swept that and then we pumped to ungodly levels. Similar to Bitcoin, we actually did make a higher high here, okay? Which obviously would have maybe potentially set some bearish divergences on lower timeframes. I mean, if we have a quick look just to see, there's none on the daily, none on 3 days. No, so there wasn't any actual bearish divergences. Now, if you do come and have a look here, again, on lower timeframes for Solana, we did retest this breakout range, okay? And that's just simple wicks to the highs and resistance and support, and bang, we took off support there. And again, same again, we didn't quite catch the low. My average entry for Solana is about 186, which is around this sort of liquidity zone that we were targeting again. So again, we're in a long, and I'm not longing anything until maybe we revisit that level, or potentially we stop loss and we go to the downside. So I'm happy again, and I have taken some profits off the table from this block of liquidity. And we, as I said, some GTG members managed to capture the wick all the way down at 77. And it was, again, a very simple trade, okay? And how we measured that was just the stop loss, sorry, not the stop, the fib from this level, the swing low, okay? This retouch here of macro breakout range, the retest there, okay, to the swing high of 295. And what we were looking at is obviously this accumulation and potentially option down here. Now, again, the stop loss, I started bidding from about there. My stop loss was way down here because the opportunity, right, was going to be pretty good back to the upside. And I do think that we could see continuation here. If you look on the daily, it looks like Solana wants to push a bit higher, but we do have to just, like I said at the start, just monitor what Bitcoin wants to do. If Bitcoin wants to go back down lower, if macro events don't really show us that risk on assets are going to continue for a bit, then sure enough, we'll probably break down. So for me, we are in this long from about 186 as said is my average entry. So we're still well above that $20. I have taken some profits at the 618 here at 216. But I am watching this for potential high low, and then maybe I will add to my long if we do see maybe price do something like that, and maybe bullish catalysts start to hit the news. But for now, I'm staying patient. I'm staying neutral. I'm happy with my position. Spot allocation is very much if we pump up to new all-time highs. If we fail to break above these sort of levels with Solana, I will definitely be taking quite a large amount of profit because more than likely we might get that third wave. Okay, so we have one wave, two waves. Okay, we come back down, we get that third wave, we set a new all-time high, and then we off to the bear market potentially, or at least consolidation into Q3, Q4 later this year. So for me, staying patient, guys. My invalidation for Solana would obviously be if we take out this wick at 167, then yeah, more than likely we're trading quite low, guys. We probably go back, we could all the way go back to 126. So manage your risk accordingly, guys. Have a plan for price to go up. Have a plan for price to go down. It's so important that you understand macroeconomics and understand what the macro charts are doing. Ignore the minute charts, the second charts on your meme coins, and actually understand maybe how you can make money in trading, but how you can make money in investing in crypto, because that's so important, okay? But I will be obviously giving you lots of updates, which again, if you want more updates, join GTG because that's where we're doing it all the time. Really hope you enjoyed this video, guys. A little bit of a different tutorial. Let me know in the comments down below. Did you enjoy this sort of video? Thanks again for obviously watching. So there you have it, guys. My macro analysis on Bitcoin, Solana, and Ethereum. If you like my content, please subscribe down below, smash the like button, and do turn on notifications so you stay up to date with the channel updates. Lastly, guys, check out GTG. We are an education group that has been profiting since 2023, trading meme coins, altcoins, NFTs, futures, and so much more. So I'd love to see you in there, guys. We're building out some courses at the moment for beginner trading tutorials, as well as some more advanced features as well in time. So do check that out by signing up using the what.com link in the description below. As always, guys, take care, and I'll see you in the next one.